Hey traders, John Hal here. Hope you guys are doing well. Listen, in this video I want to do something different today. Obviously not much happened with the markets today. Dow Jones, S&P, they sort of had small updates. The Nasdaq, I think the Nasdaq actually closed a new high for the year. S&P's had a nice run up as well too. So it's really interesting to see what's actually going on with these markets right now, guys. So I want to do something different. Obviously, nothing really much has happened with silver and gold as well too. But I want to do something different today, and I want to answer a few questions that I've been getting from my actual channel. And the first one here is this is actually one from yesterday's video where it said short-term silver and gold pullback. And in this, actually, before I start this video, guys, don't place a trade based on this video. Trading is risky. Actually, you know what? Don't even listen to this video at all. Turn it off. All right, guys, trading is risky. You know what I mean? Like, you got to be smart about your trading. There's so much more there's so much that actually goes into trading that I want you guys to realize as well too. Okay, so, all right, trading is risky. All right, guys, if you want any free education and stuff like that, free coaching, then the link's in the description. Go check that out. Now, as you can see, here's short-term pullback, and in this video here. Not the one that's playing now. Let me just. So in this video here, I talk about how there's a short-term pullback and how I believe that the trend is up, and so therefore this pullback here is likely to be short-lived, and we're likely to continue running up. And so far, actually, from yesterday's video, we've actually started doing that. You can see what actually happened with silver today, right? Silver was actually up, almost 2% today. Silver was actually up at the highs, actually retraced back down. And also the gold price actually sort of kept still there. So in this video here, I talked about that short pullback. Now let me, I've got a question here. And the trend is up, but how about volume? That's actually, so the first one here is the trend is up, but how about volume, Bollinger Bands? Do you take in consideration on your trades? And here's the thing that I've learned, the Anisha channel. Here's the thing that I've learned over my years and years and years, over 10 years now, I've been involved with the markets. All that other stuff, like Bollinger Bands, those types of indicators, you can use them in your trading system. Now, here's what I'm saying, guys. If you're using those in your trading system, then that's fine. Okay, that's fine. But one thing I have found is that the most important thing to your trading is the actual price action. Now the volume comes second. The number one thing to your trading success is going to be how good you can actually just trade this here. See, if you gave me, like with my trading system, 90% of my trading decision comes from the chart itself, 90%. And then the rest comes from 2 moving averages and volume. I like to see volume on my entry, but I don't use volume to determine, like I use, and that's what I use. I'll show you my charts, how I trade here. Let me go here. And so when you're looking at this chart here, this is basically my chart. Let me bring up something that with volume here. All right, cool. So this is basically how I trade. Really, really, really simple. And you guys might think, John, that's just crazy. But the thing is this, guys, is that I used to have, my chart used to look like this. Right, let me show you here. Right, my chart used to look like this. Look at that. And I'd use the stochastics here, and I'd use the moving averages and all that sort of stuff. And I'm just like, what ended up happening is that it was just, my system was too complicated, it was too technical, and it wasn't just good for me. So now, here's the thing, guys. When you're trading the markets, you need to be able to trade. It's important to trade the markets for what the markets are telling you, right? And here's the thing that I found, that those Bollinger Bands and all that sort of stuff, that to me they actually stopped me. They slowed me down from being able to make a really simple approach every single day to trade the markets. Now, as you can see here, now all I do is I trade with 2 moving averages and volume. That's it. So I do use volume on my entries, but that's all I use volume for, is my entry day. I don't use it determining on the actual trend. You said the trend is up, but how about volume? So volume and Bollinger Bands and all that sort of stuff, that has nothing to do with the market. and it's really important for this, guys, if you think about this, and really important to understand this, how the markets work. And this is so important to understand. How the markets work is it gives you peaks and troughs. It gives you highs and lows. And with those highs and lows, that's what tells you the trend. And never, ever buck that trend. And that is the most important thing to you. Where is the trend? And from that, that's what you trade with. So therefore, the most important thing is not Bollinger Bands, is not stochastics, is not moving averages, is not volume, nothing. It is what you're seeing right now, is the chart itself. And it really does come down to, and most people say, oh, John, it can't be that simple. Prove me wrong. Prove me wrong. This is how you read the market. This is how you really read what's really going on in the markets. And again, you're looking at the highs and lows. And it really does come down to this simple analysis. And for years and years, I got in my way of this. I'd use the RSI, I'd use the stochastics, I used the Bollinger Bands, all these different things. There were so many different areas there. But in an uptrend, we have higher peaks and higher troughs, higher highs and higher lows. In a downtrend, we have lower highs and lower lows. In a sideways market, we might have a high, then a lower low, and then we run up and make a lower high, and then it'll make a higher low, and then it'll make a higher high, and then it'll come down and make a lower low. You see what I'm saying there? Like that's what a sideways trend does. So here's the thing that I found, guys, with your analysis by looking at the market, it's so important to just bring it back to that there. I promise you guys, this is when my trading became so much simpler and my profits took off. And therefore from following the system, that's where I get a 90% success rate. In fact, yeah, like I do have my losses, but my last 7, 8, 9 trades have been winners, been profits. I got out of a small profit today as well. And who cares about that, right? Because I'm going to have my losing trade. But I'm telling you guys right now, the simpler my trading got, the more my profits went up. And I know you guys might, and it's very difficult, right? It's very difficult to actually get rid of that stuff. But for me, it was like literally 90% of your trading decisions must come from your chart. You use the chart to give you your entry signal. Then you use your indicators to confirm. Don't use your indicators to trade. If you want a high win-loss ratio, all I say is that if the trend is down, you're getting lower highs and lower lows, then if it's a downtrend, just stick with that trend. Like I've seen many times with the Dow Jones, right? And it comes down to as simple analysis as this. Look at this here. Look at the Dow Jones, right? If the trend is up, you just say, okay, then there's nothing other but the trend is up right now, and that's the only thing you're going to go through. And you trying to question or gauge or try to guess when the top is in is just very risky. It comes down to a simple higher high, higher low, higher high, higher low, higher high, higher low. Look at the trend. See what I'm saying there, guys? Right? And so now we're doing this here. You know, yes, we could actually start to roll over here. If it does, guys, then that's what you do, right? You read the market as it's going along. So with silver and gold, or with any market, even with the Dow Jones, any market, as long as that market is still making these major higher low, higher low, higher low, higher low, and higher low, the buyers are still in control, and you don't want to fight that trend. I promise you guys, just keep it simple. Go back to the analysis and keep it simple. Now, yes, I have my entry day. I have an entry day that I look for. I have my entry system that I look for. But don't. If you want to start making some leadway in the markets, the most important thing you do is bring it back to the chart itself, like you can see here. And from that, you read the chart, and most of your trading decisions will come from the chart. And then I just use my moving averages, and I use my moving averages. And also volume to confirm that this is a really good trade. Now, I'll give you an example of the reason why I use volume to confirm. If we have a big up bar, right? Just say I had a few small days through here. These are little small days, and had a big up bar. And this day here was giving me an entry signal. But my volume looked like this. It was like a big day. This one gave a bit more day. And then the volume looked like this on this day here. Can you see how that's a lot smaller than this average day here, right? This here is a lot smaller volume. That tells me that this here is not a real true strong bar. But if I can get like a big towering volume, like we're talking like up there, like a big towering volume, and we get the breakout, that's actually a really, really, really good sign. So that's what I use volume for, to make sure that just because we have a big breakout bar, I want to see that volume there, because that just shows me that because sometimes the market can move on light volume, right? And you don't want to do that. If the market's moving, you want to make sure there's big volume there. That's the institution. That's a lot of other people in the markets. Make sense, guys? So there we go, guys. It doesn't mean you're going to get every trade right, but if you want to start really putting the probability on your side, it really does start with, and as you said here, yeah, the trend is up, but there really is no buts about it. And it really comes down to just that simple analysis. If the trend is up, that's all you have to worry about until the market starts to say different. Right, until the market. So if we go back and have a look at gold here for a minute. All right, this is gold. Look at gold here. The trend is what? The trend is higher low, higher low, higher low, higher low. This also could be another higher low. Where's the trend? The trend is up, right? So that's all you have to worry about. There is no buts, there is no ifs, there is no, well, what happens if this happens, so on and so forth. If we start a downtrend, then that's when you say, okay, we're now starting a downtrend. But for now, we need to just keep it as simple as possible. We say, okay, the market, because we only can trade with what we've got right now, right? That's all we've got to do. It's not like, well, maybe if, but my indicators, blah, blah, blah. No, screw all that bullshit. It really is bullshit, guys. And bring it back to the chart. And as long as the market's making high lows, all we can do is trade with what we see right now. And so right now the market's making high lows. We have an uptrend. Therefore, this pullback here, I believe, is likely to be short-lived before we continue up. Now, I don't know that for sure. No one does. But if you're looking for the probability, and I believe we have a big probability that this is likely to start turning around soon and start heading higher. So there we go, guys. Bit of a question for you and help there.